Welcome back. So the market has given off a little bit from the top, but we're still looking at about a 100-point move on the Nifty, just about a 0.5% up. So, there you see slight bit of cooling off, but it's early in the morning, so let's figure out how that goes. Keep the corporate conversations flowing, and Samvardhana Motherson is the next stock on our radar. The company's promoter, Sumitomo Wiring, sold off about 3.4% equity stake yesterday through a block deal. This is to fund partial debt repayment, we are told. With this stake sale, the holding of Sumitomo Wiring has now gone down to 14.32% in the company. Kunal Malani, CFO at Samvardhana Motherson International, is with us. Kunal, good morning. Thank you very much for joining us on this quick call. So first question, and it's the most obvious one. What's the rationale, if any, that perhaps the promoter entity has shared for this stake sale? And the market is really wondering if this is a start of things to come. Will they be paring down more stake?
So thanks, Ravi. Good morning to everyone. Look, I think as Sumitomo mentioned, the world has seen unprecedented inflation, unprecedented interest rate hike. If you look at Japan, in reality, it is probably seeing inflation after many, many decades. So it has been unprecedented times, and that is what has led to them trying to reduce the debt that they have on their balance sheet. Having said so, they remain promoters, they remain on our board, they remain committed to the business, they remain a great technical partner for our subsidiary MSPL as well. So in reality, nothing has changed from our partnership perspective, but this probably was the corporate strategy to reduce some of the debt that they have on their balance sheet.
Right. But Kunal, a lot of people will counter-argue saying that, okay, if you have to pay down debt, there are other options. You can refinance, you can sell some other assets. The fact that they've chosen to sell, it's a small portion of their holding that they've sold right now, but the fact that they've chosen to do so in, in this company, that is making people wonder what the broader strategy is. So again, any conversations? Will they be perhaps selling more in the market?
Wrong person. Frankly, that is better asked to Sumitomo.
But no, in case you've had any conversations, I mean, in case the company management has had any further conversations on this with Sumitomo?
No, not really. All that we know is they have taken a 180-day lock-in, so clearly nothing's happening for the next 1 days. That is what we know. But as I mentioned, they remain on the board. They remain a great partner. So in reality, from a company perspective, nothing has changed.
They have to repay their debt. They've sold about 3.5% stake right now. Of course, they can't sell anything for the next 6 months. Do you think the matter will rest at their balance sheet? And because every person we speak to is predicting some more weakness going forward for the world 6 months, down the line. You're talking about unprecedented times. Perhaps they can get worse from here. Were they to get worse, do you think that they will then sell more? That's one. And secondly, your arrangement with them is there any definite time with the kind of partnership, the technical arrangement that you have with them?
No, the second question first. So there is no time frame to the technical assistance.
Okay.
In perpetuity, and it is as long as they remain a shareholder in our company. They've also highlighted that they remain fairly committed on the domestic wiring harness business, which, if you remember, was the original joint venture that they did with us. So now whether they need to sell more, what they need to do, again, as I said, it is questions better asked to Sumitomo, because it really depends on their corporate strategy and how they want to go about doing it.
So let's talk about your business itself. Yesterday, you also acquired the remaining 50% of Fritzmeier cabin engineering from F Holding. Just wanted to understand, how will you fund this? Will you have to take any incremental debt? And you're still sitting on what, close to around 8,400 crores of net debt?
Yeah, that's right. But it is not net debt that has a worry to us, because as I mentioned, we are on a deleveraging path as the world stabilizes. Plus, on a net debt to EBITDA basis, we still remain below 2 odd. So, give or take, I think there is enough capacity on the balance sheet. It's a smallish one. It's 110 crores. Again, just to highlight, while we have bought our partner Fritzmeier, but he remains committed to the business as well. So that just shows you the strength of the partnership that we have. He will continue to be on the board as well. We will continue our technical alliance that we have with Fritzmeier. So again, while we acquired the asset and we will get 100% of the benefits of it, it just showcases, the partnership mantra of Motherson continues.
So just some more details on Fritzmeier. I don't actually have the total P&L with me. I think 9-month revenue was 144. Was this entity profit making? Was there a loss? How much debt did it have on its books? And what kind of margins does it operate on?
It operates on teens kind of EBITDA margins. Last 9 months, it's shown a 70% growth from the previous quarter, from the previous year. And the way we see it positioned with the amount of infrastructure spending that it is doing, the requirements for off-highway equipments will only increase, and that augurs well for the business.
Profitable, Kunal?
Yeah,
is it a profitable entity?
It is, as I said, mid-teens margins.
Right. What's your target on content per vehicle? I'm just trying to understand with all these acquisitions that you're making, the new categories that you're catering to, from say the current levels, how much higher do you think they go and by when? That's one. And secondly, electric vehicles, that's the buzzword. You made a big acquisition there as well. About 5-6% of your revenues currently comes in from EVs. Where does that go going forward?
Look, on EVs, our order book also on the SMRP BV side is 37% EVs. So adding SS is only going to enhance it. So you should be seeing high double-digit growths quarter on quarter on the EV front. On the content per vehicle, the reality is, well, it's not a track number per se, but I would imagine with newer products coming in, as well as all the industry trends, whether it is premiumization, whether it is more SUVs, whether it is more EVs, all of these are actually enhancing the content in our existing product line itself. So I would imagine, all in all, we should be inching upwards on this, but it's not a track metric.
Finally, Kunal, leave us with an outlook. I know you don't give a specific guidance, that's fine. But still an outlook, because you've been doing these acquisitions. The latest one, as you said, is the margin is in the teens, though it's a much smaller revenue number that we're talking about. But as we look at FY24 for the company as a whole, would you be perhaps aiming for double-digit margins? And what's the kind of top-line growth, top-line profile that you perhaps would have in mind for the new year?
As you rightly said, we won't talk about margins, but I can say the industry as a whole seems to have been an improving trajectory. Even if you look forward, in spite of all the headwinds in the in the different economies, we still anticipate a decent amount of growth to come in. We are more favorably positioned on the more premium end of it, where a lot more the pain is much less and the content is a lot more. So all in all, I think we should be growing both on the top line and on the bottom line versus the current year.
All right. Thanks a lot for joining in, giving us details on your business going forward. We will obviously await what takes place from Sumitomo, but that's a question, like you said, better posed to them than you. But you are confident as ever about your business. So thank you for joining in. That's Samvardhana Motherson. It was lower yesterday, lower today.